Ladies and gentlemen, good day and welcome to the Q3 FY21 earnings conference call of Techno Electric and Engineering Company, hosted by Asian Market Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Amber Singhania from Asian Market Securities. Thank you, and over to you, sir.
Thank you, Margaret. Good afternoon, everyone. On behalf of Asian Market Securities, I would like to welcome everyone for 3Q FY21 earnings conference call of Techno Electric and Engineering Company Limited. We have with us today Mr. P.P. Gupta, Chairman and Managing Director, Mr. Ankit Saraiya, Director, along with their management team representing the company. We shall start with the opening remarks from the management, and then we will move to the Q&A session. Over to you, sir.
Yeah, thank you very much, and very good afternoon to all of you. I welcome everyone to discuss our financial results for the quarter ended 31st December 2020. Anything said on this call which reflects our outlook for the future or that could be construed as a forward-looking statement must be reviewed in conjunction with the risks that our industry faces and in turn company is exposed to. 9 months results are not comparable on year-on-year basis due to the impact of COVID-19 in the quarter April-June 2020, where we lost almost about 2 months in this quarter, in the first quarter of this year. And we continue to be impacted with the local lockdown laws and quarantine rules by different states and particularly Northeast, where these rules are even severest. Let me quickly highlight our performance for Q3 financial year 21. The total revenue in this quarter stands at around 259 crore against 270 crore above the last year. The revenue of the EPC stands at around 210 crores. Revenue for the wind segment is at 45 crore approximately. The company has recognized the differential of the tariff payable for this year and last year pursuant to a APTEL order dated 28/1/2021, where they has surprisingly, reduced our tariff over 18/19 to by 0.975 per unit, which stands set aside. EBITDA for the company stood at rupees 77.51 crore in this quarter. The operating profit for the EPC segment for this quarter stands at rupees 36.5 crore approximately. Operating profit margin in EPC segment is at around 18% plus minus compared to 17% last year. Operating profit for the wind segment is at 41 crore. Other income is at 11 crore, nearly at par with last year. The profit before tax for the quarter is at 5.71 crore compared to 42.5 crore last year. That thereby it is up by around 77% year on year. The profit after tax is at 56.6 crore compared to 32 crore last year, signifying a high by 75% year on year. The EPS is at 5.15. Coming to 9 months results, the revenue in 9 months stands at almost around at 748 crores compared to around 795 crore last year. And similarly, the revenue from EPC stands at around 580 crores approximately. We have been able to cover most of the ground despite lower revenue in first quarter due to the challenges faced because of the COVID. The revenue from wind segment is at 97 crore at par with the previous year. EBITDA for the company stands at 197 crores. Operating profit for the EPC is at 111 crore, 11.5 compared to 125 crore last year. The operating profit margin is at 19.3 compared to 18.8 last year. The operating profit for wind segment is at par with last year, more or less at 85 crores. The other income is at 74 and around 75 crore compared to 36 crore last year. It's basically high because of the profit from the sale of investment of rupees 28 crore from KT Jhajjar to InGrid, and the dividend we received from the JV for about 15.8 crores. The profit before tax is at 219 crores. Profit after tax is at 171 crores approximately. The EPS is at around 15.67 or 15.7. The current investment values, including cash and cash equivalents, is at 800 crores. The order intake has seen a major growth or improvement in this quarter compared to previous 2 quarters. We have almost booked a business of about 300 crore in this quarter from Power Grid and from Kerala State Government, and we are further L1 in another about 665 crore business with which majorly includes a 1 FGD order from DVC for 500 crore, another 1 TBCB package with Power Grid. If Power Grid wins, we will be awarded back to back. And this would take our total intake for the financial year to be around 1,000 crore plus. The unexecuted book as on date is around 2,000 crores. The outlook for larger business shifts more towards, as conveyed earlier also, towards generating plants for pollution control systems and also towards the distribution segment. So the major is 1 FGD segment where as per the notification of Government of India, all coal-fired thermal plants need to limit their sulfur emission. Where SCBs and private sector have yet to implement the plan, but the CPSUs are really advanced in this case, and we expect business of around 150 billion rupees in next 2-3 years at the industry level, out of which we may be eyeing about 1,000 crore over next 2 to 3 years. Business also for another 500-600 crores, so that this segment continues to give us a space of execution at 500 crore a year. The transmission segment continues to be stagnant as it is limited only to the evacuation of renewable power at the moment. There is ongoing TBCB bidding for 66 gigawatt of renewable power, which is expected to be tendered out by June 21. Against the bid submission dates have been again extended or revised from time to time, so we don't see that in execution these orders will happen during this year. We plan to bid for, also plan to bid for 4 projects, small value each, less than 500 crores, in the state of Maharashtra, MP, Karnataka, and Rajasthan. The union budget for 21-22 has allocated 3 lakh crore to be spent over next 5 years for the power distribution to be. The funds will be linked to the financial performance and viability of by the distribution companies. We are seeing that government is keen to implement reforms in power sector which are overdue, and they are even gone to the extent of talking about delicensing of the distribution segment, which will be a milestone in itself. We are seeing the good interest from large investors, InvIT funds, to participate in these TBCB bids along in partnership with us. This will enhance our access to capital and will be able to participate a bit more aggressively, although the market is really aggressive and intensive. On the distribution side, we see a lot of activity happening going forward. Particularly in the case of smart metering and also the power distribution networks will also be accordingly made more smart and intelligent as a backup to the metering. The main aim of the government is to improve efficiency and contain losses, so that the health of DISCOMs could be improved and a choice could be given to the consumers in terms of the power supply, which will be, again, I will say, a very big breakthrough. We would mention that the projects that in the near future will be interested to us is a 9 lakh meter project in the state of J&K, where we are already implementing a project with REC of 2 lakh meters. Apart from this, there are reading in media that government will be utilizing the opportunity as reforming the sector, which are overpending in the name of Atmanirbhar Bharat, which is also a long-standing demand of the stakeholders. This is holding up the amendment to the Electricity Act, to the tariff policy and estimation of gross subsidy, payment of subsidy directly to power consumers, and a lot of planning is made through CA to give a visibility over next 5 years on improving efficiency and stability in power supply. As usual, I will restate that the power sector at the moment is at a very critical juncture, and something good should happen very shortly going forward, and it will be a game changer. Wind segment. We are again facing headwinds because of the poor financial health of the DISCOMs and delays in payments, and there is a pressure on the tariffs also, which we have to constantly fight at regulatory regimes. We hope to realize our pending payment of last 2 years shortly out of the 1.2 lakh crores package announced by the Finance Ministry through REC, PFC to DISCOMs to clear the generator dues up to June 2020. We have already received 38 crore and 28 crore is expected in this week, making it 66 crore out of the total dues of around 132 crores, which is a 50% as first tranche. Additionally, we have been speaking about the REC price issue since the last few quarters. There is no trading happening in this due to the after the APTEL has stayed the trading of REC pursuant to CRC revising the floor and forbearance prices, and we are hopeful that the order reserved in the month of October will be delivered shortly, and CRC order will be set aside. And normal trading resumed. That is our expectation. In the coming years, I will again reiterate that we are strongly seeing the power sector reforms happening with a focus on efficiency, stability, and reliable power supply, cost of power, and improvement of financial health of the DISCOMs and this sector. The focus, however, will continue to be on renewable power with related transmission infrastructure as Green Corridor, where your company has been the first mover. The transmission infrastructure is required for 500 gigawatt over next 10 years. Our thrust on overseas market is also bearing fruits. We are hopeful of bagging further businesses in the markets of Africa and Afghanistan. I want to discuss another interesting opportunity going forward. Techno has always been good in or excelling in DC power-based solutions, particularly in power guzzling industries like aluminium earlier. Now we see this opportunity emerging in data centers. The pandemic has created a lot of stress on digitization as well as online systems, and by virtue of huge population in our country and rising penetration of internet and mobile telephones is led to a significant data proliferation among the consumers. We are the total, however, to handle this data, to preserve this data, and also the privacy of the data, as per the requirement of INB Ministry, India will be needed to add a lot more data center capacity, which currently is at no more than 550 megawatt plus minus, and we anticipate that this will grow to at least 2 gigawatt in next 3 years and to 5 gigawatt in next 10 years. With such growth and related investment, we plan to develop an ultra-scale hyper-density data center of 25 to 30 megawatt, I'd say, in the city of Chennai. We'll be captively consuming the wind capacity we have in that state, and our data center will be carbon neutral. And that along with the requirement of, and will meet the requirement of hyperscale customers like Microsoft, Amazon, Google, Facebook, etc., because of their ESG commitments. The total capex on this facility will be 750 crores, which we intend completing in no more than 1.5 years, and 60 to 65% capex out of this happens in electromechanical works, which are the core competency of your company. So we will not only benefit by utilizing the renewable energy produced by us in Tamil Nadu to be used as captively, but we'll also be able to leverage in-house expertise of doing these works, and also in future we'll be able to take up these works as EPC after demonstrating our capability in this area. With this now, I invite questions and any further elaboration you need on any of the points of my presentation.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. The first question is from the line of Ranjit Shivram from ICICI Securities. Please go ahead.
Yeah,
Yes,
hello.
please.
Hi, sir.
Hi, how are you?
Yeah, congrats on good set of numbers,
Thank
and
you.
I hope the growth prospects will be encouraging after the budget.
Absolutely. Let this quarantine rules a bit more settle down as a nation. Today we have become 28 country nation, no more 28 state nation. That's a huge challenge to handle.
So,
Yeah.
Just on the order outlook for this year and the next, if you can give some more clarity. And this GEC is still getting delayed. So when do we expect this green energy corridor orders to happen and subsequently our order to improve? That will be my second. And third, if possible, this distribution reforms. So do we also plan to come out with some products, because that will be a huge opportunity, 3 lakh crore of this distribution reform. So is there any thoughts from our side to participate in that? Thank you.
You see, as far as the order book is concerned, I shared with you that we have booked order of 300 crore already, which includes one package of Seeker from Power Grid, which they have won recently in this TBCB bidding. We are further L1 with Power Grid in another almost about 300 crore packages, which have to go through TBCB bidding, and they should be mostly over by 15th of March, to my mind, as they are happening one by one. So Power Grid is fairly aggressive, as we see. In the past, their success rate is almost 80%. So we are very hopeful of securing this business. Additionally, there is a business happening selectively in different states also, where we'll pick up, like Kerala, we got 85 crore order now, recently to build a 220 kV 2 GIS stations. So similarly, we expect more business from MP, as well as from the state of Telangana and Karnataka going forward. But overall, if you ask me, I will like to say growth will happen out of FGD business more, where we expect to book almost about 500 crore is certain to we'll get tomorrow's board meeting in DVC. It should be approved. So that will be another 500 crore where we are L1. And we are also talking to a private entity very closely, order to mature about 400 crores. So FGD should give us a good strength. Transmission will continue to be stagnant at 500 crore a year. But this data center addition will be another business to us, that out of our capex, we'll have a EPC of around 500 crore in our books. That is to be executed over next 12 to 18 months. So, and also we are seeing traction of businesses from other entities also in data center, as much as we are finding interest from the investors from US and Singapore in this business. So overall, I will say that business prospects are good. Now coming to distribution sector reforms, you see, making product is never a forte of Techno. We have always been a technology high-end complex solution-based company. By virtue of discom or distribution power getting delicensed, I am very sure it will. This sector will see a see-through change.
Mr. Gupta, we lost the audio from your side. Mr. Gupta, I'm sorry, we can't hear you. Ladies and gentlemen, we would request you to please stay connected while we check the line for the management. Ladies and gentlemen, thank you for patiently waiting. We have Mr. Gupta reconnected. Over to you, sir.
Yeah, my apologies, I got logged out. So what I was trying to say that as far as Techno is concerned, we are fairly in a good position and constantly moving up the scale in solutions. But coming to distribution reforms and part of this 3 lakh crore, we will definitely be looking more on reforms, not by financial injection into the discoms, but by definite steps which brings efficiency and improves performance, contains T&D losses. All that should be the major agenda of the government, so that these are sustainable, reforms, and money is wisely and utilized, not throwing good money after bad money. So some part of distribution has to be privatized, if not all of it, so that new technologies can be deployed, new modern day solutions can be a way of life. Consumer can have his choice like telecom, and there is a competition in place in every market, in every municipality limit, in every market. So definitely it will sound good for everybody, a product manufacturer, solution provider, or even a power distributor, power sub aggregator or power distributor. All will be good. So delicensing is a very sensible thought of the government, but we need to see the political will to go through it. As we have seen in the past, many good things have been talked about, but implementation has been very time-consuming or tardy. Hello.
Sir, just a follow-up. This energy meters is one area where we have already giving some solution. So, wouldn't this distribution reform also give rise a lot more of energy meters kind of products? So,
absolutely.
In that aspect,
Sir, not only energy metering, but I am sure even the networks will undergo a reconceptualization. There is so much of scope. The entire networks will be reconfigured technologically and otherwise, and you will see that like telecom today, voice is no more a product. It is value-added services. So same future I see down 10, 20 years in power also. That if you can produce power at 2 rupee a unit in renewables, and it can be so distributed, power at every rooftop, at every countryside, it will be a revolutionary change. Once we have energy storage solution in place, we have renewable power, next corridor being produced at competitive prices, This will be altogether a different world. That's what I see in next 10, 20 years. For young people, it will be a totally new lifestyle.
Okay. I'll join for further question. Thank you for.
Yeah.
Thank you. The next question from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, very good afternoon, sir.
Very Tulsian. How are you?
I'm doing fine, sir. So I have.
Can you raise a bit of a volume, ma'am?
Yes, sir. Sir, is this better?
Yeah, it's better. If you can raise a little more, it will be good.
Sure. So firstly, just want to understand these order book and order inflow numbers. I was not able to tally. So this 300 crore inflow that we mentioned is the 9-month number, right? Not the third quarter number.
Yeah, it's a third quarter number, sir. Not 9 months.
So, but our order book was 2,100 crores, what we shared at the end of 2Q. We have done about 200 crore of revenue in EPC. So ideally, if you book 300 crore worth of orders, it should have increased by 100 crores, right? But it's gone down by 100 crores sequentially.
You see, what is happening is that some business becomes unexecutable also over the time by some of the orders with us. So we do make some minor adjustment here and there. So you can say executable value is around 2,000 crore plus minus.
Okay.
Ultimately.
So, sir, can you share details of this 200 crore rupee orders which we have excluded from order book? Like which were these orders, just to get some understanding around that?
You want me to name the order specific?
Maybe, orders or the customers, in which area, transmission, PGCL, state, what were these orders?
One order is obviously FGD for Bokaro of 300 crores. And then we are executing one order for Adani at Lakadia. We are executing one order for Sterlite at Karnataka now.
Sorry, my query was to understand which are these orders that you have removed, which you mentioned, because that gap is almost 200 crores. So I want to understand which are these orders that you are now...
Send me a mail, I will send you, because I'm in Delhi now.
Okay.
I'm not in my office, so it will be difficult to give you... it may be distributed over 15-20 orders,
Understood. I'll get in touch separately for that.
Oh, you're welcome.
And secondly, sir, just want to understand, so order inflow wise, we used to guide that maybe annually what you're mentioning, 500 crore odd, we should look at it on transmission side annually. Another maybe say 400 to 500 crore on FGD side, and maybe 200 to 250 on the smart meters. Right. So that should be largely the opportunity of about 1,200 to 1,250 crores odd annually is the way we should assume.
500 crore from the data center now, which we are starting with.
Correct. Yes, sorry. So that will add it up to 1,700 crores, where first order we will do on our own, and then we will pitch it to the external customers.
Right, absolutely.
And sir, for this two areas which you mentioned, one is data centers, this 750 crore entire thing will be funded by Techno from its cash, or is it a project under JV?
You see, to begin with, we have taken up this project, and a lot of interest is shown by the foreign investors from US and Singapore. But we are under NDA, so we cannot share more details with you at the moment. But ultimately, there will be a JV partner at the SPV level.
Okay. And sir, the second thing which you mentioned was these 500 crore bids in each of Maharashtra, MP, Karnataka and Rajasthan. So those are what essentially these are BOOT projects that we would be bidding for?
Yeah, BOOT, these are TBCB BOOT projects. We'll be taking part in 4 of them, which are each around 500 plus minus and collectively at 2,000 crore. So we'd like to win one of them if possible.
When 1 out of 4 is what we are targeting. Got it. And sir, last question, if I may please, on that mutual fund side, if you could just give us what is the exposure of those bonds reduced to, since you have been sharing consistently the progress on that part.
Yeah, now the exposure has come down to 150 crores, which we are hopeful to bring down below 100 by March. That is what it is, and next year it will be a full exit. And that is not a mutual fund, I will say. That is a bond exposure.
Bond. Sorry,
we took as a PMS, and the lessons learned are that whatever money you get, you keep in mutual fund now, which is safe and healthy. So the present balance in mutual funds is also around 500 crores in cash, other than this.
Okay, got it.
And another 150 crore is an investment continuing in our JV, SPVs with Kalpataru in transmission.
Okay.
Yeah.
Got it. Thank you so much, sir. I'll come back in the queue for the follow-ups.
You're welcome.
Yes. Thank you.
Thank you. The next question is from the line of Dipesh Agarwal from UTI AMC. Please go ahead.
Yeah, good afternoon, sir. Sir, my question is on the data center side. So, do you have in-house expertise on setting up data center, or you are relying on some other party for this?
You see, I cannot claim to have a capability to give a tier 4 data center in-house. So but we have lot of capabilities in element building of a data center. Let me put it, because data center by and large is a multi-layer power solution which has to be ensured to be available in any circumstances, so that availability and reliability is known as the 99.9. And additionally, you have to supply a quality power to the racks. So definitely we will be working on the first project with a global consultant who do these jobs day in, day out. So they will be hand-holding us, so that first project and customization happens together in partnership with them. Partnership, I mean, under their consultancy and detailing. And once we have gained experience, definitely we can be on our own legs.
Okay. And sir, you mentioned a capex of 750 crores. So at 750 crores capex, what would be the power requirement on this data center, and would we be able to tie up our wind asset entirely for this data center?
Absolutely. That is our objective, sir. That we have a capacity of 112 megawatt in the state of Tamil Nadu, which at a given PLF of 25%, if we translate like to a stable powerhouse, it will be equivalent to 25 to 30 megawatt, depending on the power produced. To be more precise, we produce about 200 to 220 million units per year. That will be our availability of power with us. And a data center of this size will be needing that kind of power within plus minus 10%.
Okay. So basically, this will solve our issue with respect to working capital, and this will also give us an opportunity to have a higher rate than what we currently fetch on the business.
Absolutely. You see, the power which data centers buy from the state is at 8 rupees. So your power gets better valued, your power asset gets better valued, and you are in a sunrise sector called data center. And once we do one of it, we'll also be recognized as a EPC, which are needed in the country to set up these capacities. So it will be, and our aim is like transmission. We started as a EPC, then came in TBCB. We don't want to see life cycle of the TBCB projects. So we parked within grid and InvIT. Similarly, these data centers also find ultimately REIT or InvIT happens in this segment of business also worldwide. So the business model will continue to be same. That you develop it, you operate it with a global partner, rent out to one of the digital data companies like Facebook, Google, or Microsoft, and they are parked in REIT or InvIT. Like Singapore, there is a company called Capital Land, funded by government of Singapore itself. So they take care of it, sir. It's a simple business model ultimately.
Okay. And sir, of this 750 crores capex, what portion of the capex will be executed by Techno's, say, EPC arm, and would you be earning an EPC margin on this?
You see, basically we'll be doing the power receiving and then power conversion from EHV to HT and medium voltage to LT. Then captive power as another layer of power. Then another layer of the energy storage solutions or a kind of a UPS solution around it with a battery backup as practiced. So multi-layer power solutions are within our forte, apart from cooling systems, firefighting system, safety security systems, which are integrally part of these stations. So we have already taken land in the state of Tamil Nadu at Chennai. Land has been given by their industrial estate in Sipcot, and we are in a very advanced stage to now launch the project.
Okay, so would it be fair we will be at least doing 50% of the value in-house and making a company level margin?
2/3 of it, sir. Almost 2/3.
Okay, and making company level margins also on this EPC side?
Margin level may be 1 or 2 notch lower or upper, but it will be a long-term margin, sir. You will ultimately leverage margin, but wind will become more valuable to you as a asset.
Understood. That's very helpful. Thank you, sir.
Thank you.
Thank you. Before we take the next question, we would like to request the participants to please limit your question to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Rohit Balakrishnan from Vriddhi Capital. Please go ahead.
Hello, sir. Am I audible?
Yeah, very much audible.
Yeah, good afternoon, sir. Sir, in terms of your FY21 this year, so if going by your earlier guidance, so this quarter, Q4, we should do an execution of 500 odd crores, because you mentioned 1100 odd crores as like probably the revenue. So is that a correct assessment, or there is a change in that?
Yeah, you are right. We like to target that, but presently what we are finding is that discoms are short of money, sir. So we don't want to put, more working capital in the business unless cash is visible with the customer. That is how Q3 we could have done another 50 crore, which we did not. Merely because we are not getting payments from discoms for the last 2 months. They are starved of money, funds, whatever you say, due to pandemic. So if their funds position improves and government funds comes in, we are definitely hopeful of 500 crore. Otherwise, 400 crore should be the fair achievement. So you can say that if 1100 crore of EPC we don't achieve, we'll definitely achieve it with the wind top line, wind powers, other than other income. So that is purely a realignment of progress with the availability of funds. We don't want to create more debts, book debts, and by raising our top line.
Right. And so next year, then, I mean, are we looking at like probably what you said, excluding this data center? Are we looking at like 10-12% kind of growth only on the overall EPC side, or I'm talking again excluding data center?
No, are you talking of this year or next year, 21-22?
21-22 I'm talking about, sir.
21-22 will be definitely a better year as far as I can see. Vaccination has started and government is serious for economic growth. Budget is very sportive. So I'm sure liquidity should not be an issue after April onwards. This is an issue only temporarily limited to this year. But then FGD will be another growth center other than data center, which to this year we wanted to do 100 crore, but could not do even 40-50 crore. So next year FGD will contribute no less than 500 crore. So another 750 crore we can easily expect from transmission distribution, and obviously data center will also be adding to the top line. So we are very confident that 21-22 will achieve a top line of 1,500 crores.
Right. And so this data center business that you just talked about, so 750 crores is what we will is the overall investment. So I mean, how should one look at it from a company perspective? Because we will be doing there will be some EPC revenue also, and then there will be some wind business also coming through this, as we will be using it captively. So on a total investment basis, how do you, I mean, from an ROI basis, what kind of ROI are you looking at from this business?
You see, if you study this segment of business today, it is a very healthy and rewarding sector as of today. The beta is not less than 50% in this market at a full power cost, because power is the biggest raw material post commissioning of the data centers, other than the manpower cost. So power is our in-house availability with us, which will contribute at least 150 crore operationally, apart from another 100 crore happening as a rental value. So Techno's delta will be largely out of the power side, and the EPC capability to do in-house is almost 2/3 of the project cost. You can compare this with another TVCB project, that you create a project and you do a EPC in-house, and ultimately you happen to park it with REIT or InvIT at a market-driven price. But we'll continue to be power supplier to this facility, which will continue to give us at least about 150 crore top line as a power supplier in the process.
Sure. And eventually you would sort of, like you do in TBCB, you would sell it to...
We'll exit through REIT or InvIT, accordingly down 2 years.
Right.
And secondly, we'll also be developing these facilities in a JV, sir. And we'll create a separate holdco for this business, which will be jointly held by a foreign investor along with Techno Electric.
Right.
We won't like to take whole risk on our books. That is our wish at the moment.
Sure. Sir, one more question so just as a segue to this. So, sir, we have already around 800 crores on the books, and another 100 odd crores are expected from Tangentco and similar numbers from Kohima, perhaps even more than that. And then obviously we are generating cash flows. So you had mentioned last time that like we would be distributing a hefty amount, but that, I mean, in terms of, we have done an interim dividend, but it is certainly not very high from the kind of cash that we have. So just want to understand your thought process. What is your thinking? Because in the past also we've been generous with cash outlay in the form of buyback and everything. So just want to understand what is your thought process at this point of time on this.
You see, we have already paid 3 rupee last quarter, 3 rupee this quarter now, and another final dividend which is due, which will be a part of the March quarter. So in all go, we will be definitely distributing around 40% of the bottom line as per our policy. Had government taken out tax on the buyback, we would have preferred buyback option. But now dividend is tax-free and taxable in the hand of recipient, and our major investments are mutual funds, and who are largely tax-free, you see. And if they are part of growth scheme, even investors are tax-free in those funds. So that way, the market response was more in favor of dividend. So we are very, trust me, you will be handsomely rewarded going forward. It will be no less than buyback, and it will continue like that.
Thank you. I would request Mr. Balakrishnan to rejoin the queue for follow-up questions. The next question is from the line of Nishit Shah from Equitas Investments. Please go ahead.
Good afternoon, sir. Sir, I wanted to understand the smart meter opportunities of 9 lakh meters in Jammu and Kashmir. So in revenue terms, how big can this be?
Sir, generally you can take one smart meter project is around $100 per meter as installed.
Sorry, sir, I did not get.
I said one smart meter as installed is $100 to $120 per meter.
Okay.
So it means per meter the price level is about 8,000 rupees without taxes.
Correct, understood.
As installed. So you can multiply 9 lakh by 8,000.
Yes, sir. Sir, and is the bidding out or, where is this project right now?
Which one?
This 9 lakh meters?
It will happen in the whole state, sir. Presently we are doing 2 lakh meter, 1 lakh in Jammu city and 1 lakh in Srinagar city.
Correct.
So 9 lakh meters will be in the other parts of the states.
But is there any timeline that it would be done within 2 years, 3 years and the bidding and everything is out?
You see, at the moment in power sector and the way discoms and government works, you can easily take it about 3 years, if not 4.
Okay. And sir, I wanted to get clarification so in your opening remarks, you said that there was some reduced tariff of 0.975 as per some order to 2021. So
not 21, sir. It is enhanced. What happened was, in 1819, the regulator gave an order reducing tariff to 0.97 to the earlier paid tariff up to 18, from 15 to 18. So we challenged that move of the regulator, state regulator, I am saying, in APTEL, which is a high court kind of a regulatory body. So they have set aside that order. So the tariff reduced by them 2 years back stand now billable and payable to us as per the present mandate. So that is what we are talking. Okay. That we were presently accounting our billing at 2 rupee 14 paisa as against 3 rupee 12 paisa 2 years back.
Thank you. I would request Mr. Shah to rejoin the queue. The next question from the line of VP Rajesh from Banyan Capital. Please go ahead.
Yeah.
Hello.
I joined a little late. So
Mr.
just
Rajesh,
wanted to
I'm
make
sorry,
sure
your voice is not clear.
Your voice is little low. Can you enhance the voice, please?
Is it better now, sir?
Yeah, little better. If you can do little more, will be good.
Okay. All right. I'll try. I'm sorry I joined a little late.
Now
so
it's good.
I just wanted to make. Okay. So on the data center side, what I understood was you're doing a JV where you will have a capex of 700 crores in the next year or so. So my question is that what will be our contribution to that JV, and what time will it take to come up? The plant or the data center, how long will it take to be put up?
You see, generally it is a 2-year project as industry norm is, but definitely since it is our in-house facility, we like to do in lesser periods, say no more than 18 months, preferably 15 months if you ask me. And secondly, obviously, even if you take a ratio of 1:2, then 250 crore of capital and 500 crore of loan will be there in the SPV level. So this 250 crore equity will be shared with the foreign investor. depending on his appetite. Generally, they look for majority, as we are told, in this business. So, but we have to experience it, and we'll be more clear when we talk with you March results sometime in May, mid. We'll have all the clarity on this issue.
Sure. My second question is for next year, fiscal year 22, your growth, it seems to primarily be driven by HCDs and the smart metering. Did I get that right, or am I missing another piece of growth?
Right. FGD, smart metering, and additionally, data center will also crystallize into a way of life for next 4-5 years to come, once having done our own captive data center.
Right. And what is the market opportunity for data centers you see over the next 4-5 years?
I elaborated in my presentation, sir, that presently we have only 550 megawatt capacity in the country, which should grow to 2 gigawatt in next 2-3 years. It will be so rapid. And 5 gigawatt in next 7 to 10 years. This will grow phenomenally, at least 10 times in next 7 years. That's what I know. In foreign countries, almost 10-12% of the power gets consumed by data center itself. If you look on experience of Singapore or US or Hong Kong, and similarly, this industry India was deprived of earlier because of this industry being in the hands of large foreign entities and aggregators. Now, by virtue of pandemic, digitization and data growth, phenomenally online services, education and all that, e-commerce. So, lot many foreign and privatization of data policy of Government of India. So, all these companies are looking on India hub as a hub now. So, whichever cities are now globally connected by undersea cable, earlier it was only Mumbai. So all data centers, 80% are in Mumbai. Now Chennai is connected in last 1.5 years to Singapore by undersea cable. So Chennai has become a bed. Now Calcutta cable connection is happening through Jio at Diga as the first, and then 2 more stations will come. So this is how this industry will go on expanding with global connectivity. Wherever global connectivity fiber is available, these kind of hubs becomes viable and practical.
Okay. Thank you very much. I'll come back in the queue.
Thank you. The next question is from the line of Keshav Ka from CCIPL. Please go ahead.
Sir, so just wanted to understand that, sir, next year, FY22, sir, what kind of, sir, you think that we can hit around 1,500 crore top line?
Absolutely, without doubt.
Okay, sir. And sir, also, sir, like you mentioned, sir, so basically this regarding this data center, sir, so by FY23, you think, sir, we can expect revenues to start in the second half of FY23?
Absolutely. You are rightly said it.
Okay, sir.
We should be ready with our facility by June or September.
Okay, sir. Sir, and sir, so that's all from my side. And sir, thank you very much and best of luck.
Right.
Thank you. The next question is from the line of Ranjit Shivram from ICICI Securities. Please go ahead.
Hello.
Yeah, hi sir. Just on this data center CapEx, this 750 crore will be invested completely next year, or will it be through what amount we are planning to invest next year?
Sir, at the moment, to be very precise is little difficult, but you can take roughly around 75% in 21-22 and balance 25% in 22-23.
Okay, and sir, what kind of RO return on equity that we are projecting, at least from this investment, from our internal workings?
If market continues to be what it is today, then at least 20% we can expect as a ROE.
Okay. And any particular site that we have bought or we have in our mind?
No, I shared with you in my presentation earlier that Chennai is the city and there is a Sipcot industrial area in a place called Sinisiri on OMR Road. We have already bought the land from the government of Tamil Nadu. And it is just opposite to Airtel data center and next to Adani data center. It's a IT park, IT hub, and will be part of it. So land is already in place now.
Okay, sir. That's it from my side. Thanks.
Thank you. The next question is from the line of Rohit Balakrishnan from Vriddhi Capital. Please go ahead.
So just two questions so Tangentco, we had about 160 odd crores to be received. Out of which we have received how many crores? So you mentioned about 38 crores.
I said 66 crore out of 132 crore dues up to June 2020 through REC PFC scheme. First tranche of 50% we have got, sir.
So we've got 66 crores.
66 crore out of 132 crore bills forwarded to REC.
Sir, how much is pending so far now? So out of the overall payment, total.
It is 66 crore plus dues from July to December of another 20 crore. So we have to get another 86 crore.
Okay. And sir, on the Kohima project, so any update? We had earlier said January we will know. So CLP is still expected to be the buyer or somebody else. And when do you think that will close, sir?
Sir, as far as my update is with me, we have achieved the COD successfully.
Right.
3 months we have to give to CLP to put their approvals in place, which will be over by March end or mid-March. So I'm told they are trying hard. But if they succeed, is good. If they don't, then also we have alternate buyers ready to buy this asset at a better value than CLP also.
Right. You expect this to get closed, sir, based on your timeline, somewhere in the first quarter of FY22?
Yeah, absolutely, sir. By June we'll have this done with.
Okay, and we will have the money also realized with us, or
right?
That will be...
Absolutely. Otherwise, it has no meaning. If you don't get money, why get out with the asset?
Right. Absolutely. Okay, sir. Thank you very much, and all the very best to you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Amber Singhania for closing comments.
Thank you, Margaret. So just before closing, 2 questions from my side is one, you mentioned about the Tamil Nadu pending receivables of around 86 crore. The recognition of this 36 crore in this quarter will be over and above this?
Yeah, obviously it will be over and above this, sir. This is not a part of, it is yet to be built. We have got a regulatory offer and entitlement. Now, pursuant to the notification by Tangentco, we will be able to bill it in March. But it will be retrospective billing from those dates.
Okay. So basically 50% will be from FY20 and 50% is from...
No, you see, hello.
Yeah. Yes, sir, I can hear you.
Yeah, what I am saying is, we are still uncertain, whatever money they got from REC PFC, they have availed, up to June 2020 loans. Now, balance money has to come out of the DISCOM's own resources. So presently, their resources are all strained because of the pandemic. So no sooner they get better, we are being assured that we can expect regular payment, and government may be helping them out of this 3 lakh crore payment which they have talked about in this budget, spread over next 5 years. So we are very hopeful that in 21-22, not only all dues will be over, but also we will be getting paid regularly, as usual. The backlogs issues will be over, done with, as promises are being shared by the government. But let's see, the reality will lie in eating the pudding than talking about it.
Got it, sir. So secondly, just on the pipeline side, when you mentioned the TBCB from 4 states, Maharashtra, MP, Rajasthan, Karnataka, and also the FGD tendering from the private player as well as a couple of more from NTPC and DVC. Any of these, is there any expectation that any of these will get tendered out in this year itself, or it will go to the next financial year mostly?
Pardon? Your voice is very low, sir. Can you raise it?
Can you hear me, sir, now?
Yeah, now better.
Yeah. So, sir, out of this pipeline of TBCB project from 4 states and also the FGD tenders which are there in the pipeline, any project out of these are expected to be bidded out in this financial year, or mostly it will go into the next financial year?
No, I expect they should be over in this year, failing which I'm sure they should not spill over beyond June anyway. But we are more hopeful that this power grid where we are L1 still with them, we got one job of Seeker 765 kV as we did Badla for them, which is complete now, which already secured. We should be able to get business of 250-300 crore from power grid itself by March end, or maybe maximum April between you and me. And additionally, we will like to win at least 1 out of 4 as our own TBCB package, along with one of the InvITs in the country, where we are trying. So that is the scene behind it. Our one are getting postponed at the moment, which I believe may go to May, June, if not March, April. At the moment, final dates are yet to be received from them.
Order book? Sir, just one clarification. Out of this 2,000 crore of order book, this 300 crore which we have got from PGCIL and Kerala State is included in this, or this is also
it is included in this 2,000 crore, sir. And whatever we have executed in this quarter goes out. This is unexecuted we are talking. The unexecuted book with unexecutable portion taken off, the executable part left with us now is 2,000 crore as of today.
Okay, and we have a L1 of 665 crore over and above this.
Over and above this, absolutely, you are right.
Got it, sir. So that's it from my side. I think we are already overshot the time. So, sir, on behalf of Asian Market Securities, I would like to thank all the participants, and special thanks to the management for giving us this opportunity to host the call. And I would like to request the management to put their closing remarks. Sir, over to you for the closing remarks.
Mr. Gupta, would you like to add any closing remarks?
Yeah, I'd like to thank all the participants and their over-enthusiastic participation in the call. And in case still, if any of the participant or anybody else has any query related to our performance, you please feel free to drop us a mail. And if you happen to be in this side of the country, you are welcome to drop in our office to see how we really do jobs hand-on. With this, I would like to close the conference, and I thank everybody for joining once again. Thanking you and wish you a pandemic-free year next year. And get vaccinated soon.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.